What's going on, ladies and gentlemen? Thank you so much for joining me tonight, February 6th, 7 p.m. Eastern Standard Time. Tonight's session is going to be all about Chinese stocks. This was a hot topic a couple of months ago. Q4 of 2024, we saw the Chinese government come out and say they wanted to stimulate the economy fiscally, and that caused stocks to absolutely rally. The issue is, at least now, many of those stocks have fallen back within the original ranges that they were prior to actually breaking out. And so what we're going to do in tonight's session is we're going to look through a bunch of those setups. We're going to dig into some of these ETFs, and we're going to see if this rally in Chinese stocks that was supposed to happen in Q4 of 2024 is still a valid idea, and if it is, which stock should we be looking at owning? Should be a good conversation, should last about 30 minutes, so without further ado, let's get into it. The first thing I want to look at here are a couple of ETFs that we track inside of TTI. All three of these ETFs obviously are 100% Chinese exposure, but they have different weightings from different stocks, different areas of the market within the Chinese stock market that they're looking at. We're going to look at the big three here. The first one is QWEB, ticker KWEB. It's your Chinese internet ETF. This is the one we like to look at inside of TTI the most. It's the one that's kept us out of a lot of trouble. We've had this exact same range drawn on QWEB for years. And we said, listen, we're not interested in Chinese stocks until we cross above the 3350 area with some sort of momentum. And we did back in September of 2024. Since then, QWEB has fallen back inside of the range. And I think you can reasonably assume a lot of that is because BABA fell back within the range, which we're going to look at shortly. What we're looking at now is a potential divergence in momentum and approximately absolute highs and absolute lows. So higher highs, higher lows on an absolute basis. Price is starting to form an uptrend out of this potential stage one consolidation base into a potential stage two breakout. We have a rising 200-day moving average that price is once again trading above, which might seem minuscule, but it hasn't had that through the entirety of this base. The 200-day moving average is now sloped up with price starting to hit higher highs and higher lows. We're beginning to build some sort of bullish momentum on a consistent basis. It's not great, but it's there. We obviously see that previously we broke above it. We faked everybody out and fell back in. But there's not a lot of overhead supply that we're going to have to fight through if we do break above 33.5, which I think we do have a decent chance of doing within the next couple of weeks. The reason why is a lot of the parts inside of QWEB, outside of BABA, really look good. So this is your Chinese internet ETF. It has different exposure than the other two. Let's go into the next one. We're going to look at FXI. This is your large cap ETF. These are your big boys inside of China. We like nearly the same level at 33.5. Once again, we're almost there. 200-day moving average is sloped up. Higher highs, higher lows. Where do we go from here? We're assuming up, up, and away. A lot more bullish momentum here. This is a bullish momentum regime in China, at least within the large caps. We like to trade things that are trending above the 50 RSI and are not consistently hitting oversold. To us, that means even during drawdowns, bulls are in control. We see a majority of the volume coming in below 33.5, which gives us a decent chance of buying the breakout above 33.5 with a path of least resistance higher up towards $41, $42 to begin with. So once again, this is your Chinese large cap ETF, has different exposure than QWEB. Both of these, though, are setting up relatively the same. The last one here, we have China Technology, which is a lot more closer to QWEB, but once again, different weightings. This one is the lagger of the group. So what you would do is you'd go and you look through all three of these different ETFs, and you'd say, well, why is FXI outperforming CQQQ? Is there a potential stock that might be weighing CQQQ down? The reason why we want to know this type of information, and I'm going to give you a hint, everybody wants to own relatively the same basket of Chinese stocks. Unfortunately, that basket of Chinese stocks is not performing well, and I'll show you in a second. There are hidden gems in the Chinese area of the market right now that are breaking out into new highs that we can own. So CQQQ, overweight BABA, which is part of the reason why it's firmly below its risk on level at 51, but still we have the distinct pattern of higher highs and higher lows. Once again, we're looking for RSI trending higher, and we have a bullish momentum regime on CQQQ. So all three ETFs are giving us clues as to what we can expect out of the Chinese part of the market. It might not happen tomorrow, but it certainly looks like it's gearing up to finally break above its stage 1 resistance levels that we've been in since 2022. It's important to understand that the bigger the base, the bigger the breakout. That's generally how it goes. This is now a 3-year base forming in China. When you take these types of trades, if you're a swing trader or a position trader, you generally don't want to take short-term trades on these types of ideas. Give these things room to run and let them outperform for potentially months, quarters, or who knows, years. Let's get into some intermarket analysis. So what we're doing here is we're looking at some of these ETFs against US ETFs. In this case, large cap Chinese stocks against QQQ, which obviously holds large cap US tech related stocks. And what we've seen since January of 2024 is an outperformance in Chinese stocks against US stocks, at least large cap tech. We've seen it. We're also in the beginning of a bullish momentum regime, trading north of an upward sloping 200-day moving average. This essentially tells us that if we had $100 and we had to choose which area of the market we wanted to put it in back on January of 2024, this would have been a better buy buying Chinese tech than US large cap tech. That's how this works. They're ratio charts. If we look at CQQQ, which is the weaker of the three, we still have potential for an uptrend, the beginnings of a bullish momentum regime, and once again, price above the 200-day moving average. So not only on an absolute basis are we seeing higher highs and higher lows. Is it going to break out tomorrow? I have no idea when it will, but you can see that the underlying theme here is that the market wants to push these things higher. Then on a relative basis, when you're thinking about how you want to allocate your capital, for the last couple of years, it's been a pretty bad idea to own anything from China over the United States. For the most part, it hasn't worked. But now we're starting to see it work. And we've started to see it work for the last year in FXI's case against QQQ. So now we have an absolute theory moving higher. We have a relative theory that they probably will outperform the Qs over the short, intermediate, and potentially long term. I say long term because these are potential secular breakouts that we're trading through. It's the same thing we talked about in September when QEB and FXI were breaking out into new highs. If these were secular breakouts based off of historic momentum thrusts, these are not going to just roll over and base for the next couple of years. They're not. They're going to eventually catch a bid and they're going to fly here. Financial institutions might need time to accumulate them. That's what I'm assuming they're doing right now with all of this volume within this range. And then eventually they let it go and let these things fly. So what I want to look at, there's a lot of names that you can be in. A lot. Some of them are tradable easily. Some of them are not. Some of them are OTC. Some of them have, if you're an options trader, you're really going to have to do your homework on what type of trades you want to get into because not a lot of them have options liquidity, etc. So you really have to pinpoint the leaders early. And that's what tonight's all about in my book. I want to know out of the entire universe of Chinese stocks, which I believe is 350 tradable names, there's a basket of 5 to 10 that we really are focused on potentially owning. If you can whittle that list down to 5 to 10 actionable ideas, you don't need to own all 10, but just 10 on a watch list. It really takes out the guesswork. When Chinese stocks finally take off, you go, I already know what I need to buy. I already know what I need to own. And some of them we already own. So you're going to look at that right now with us. Let's go to BABA first. Everybody wants to own BABA. If you guys don't know who I am, we're going to turn this into candlestick charts now. If you guys don't know who I am, I do not care about the fundamental nature of a company at all or a stock. It doesn't matter to me whatsoever. I'm purely price action. I'm looking at trends. I'm looking at momentum. I'm looking at relative and absolute strength. Those are the three main pillars of the way I view the market. So for everybody that's going to yell at me when I say I don't want to own BABA here, that's fine. I don't care if it's the most important company in the entire Chinese space. It doesn't matter to me. At $238 billion, this is obviously considered the Amazon of China. It hasn't done anything since 2022. It's gone sideways. There's really no reason to own this until we're up and over 121, right? Horizontal channels, we don't want to own. If you're a swing trader or a position trader, you want to own big blue skies. You want to own path of least resistances, right? In this case, we want to own things breaking out above 121 into fresh new highs. Very hard to imagine people that owned it back in 2021 are going to be looking to sell their shares for break even at this point. So I would imagine off of the 121, we fly up to 160. That's the price target, but I'm not looking to get long BABA until we're above 121. I thought we were going to get there last September. We didn't take any positions. We're waiting for that 121 close. It looks promising. As you can tell, QEB, CQQQ, and FXI all have exposure into BABA. You can see, though, we are hitting a series of higher highs and higher lows. And the RSI, while it's not in a bullish momentum regime yet, it does look like it wants to continue higher with bulls coming in on every dip. So we'll see if this continues higher. For me, this is a wait and see. Obviously an important stock in the Chinese space, but it's not something I want to own yet. Bidu. An interesting stock here because we can actually go all the way back to 2010 and find the exact same support level. So I'm going to start there. If we go all the way back to 2010 and we drag this over, this is the same level that Bidu has found support multiple times over the last 15 years. Going back to 2010, this particular level, somewhere around $80, has held multiple times. So for those of you that are technical traders, would it surprise you to see buyers step in, dig in here, and crush this thing higher? I would be absolutely not, amazed at all. I think this is what's going to happen. If Chinese stocks go, this is a perfectly logical place for Bidu to find support and potentially rally higher. If we bring this into the daily, you can really see what I mean here. We've obviously tried breaking down lower, below $80. Most recently, a couple of weeks ago, the market is unwilling to let this thing drop below 80. I don't know why. It doesn't matter to me why. It matters, though, that I've noticed it. And if I'm looking to add positions in this particular ticker, I'm looking at how does it act down here at the $80 area. So far, it's held up well. What I'm looking at on an absolute basis here for Bidu is I want to see it minimum above the 200-day moving average. I think that's a super important piece of the puzzle as a swing trader or a position trader. We don't want to be buying things below the 200-day moving average. I say it all the time inside of TTI, but cheap crap tends to get cheaper, right? And it's cheap because it's crap. You can look at Nike. If you've been a dip buyer in Nike for the last 3 years, it's been a bad ride. And there's a lot of them out there because Nike's popular. UPS is another one. How could UPS possibly be down 50, 60%? I'm buying the dip, and then earnings came in and it knocked it down another 30%. We don't like buying things below the 200-day moving average. It's such a simple rule that will keep you out of hot water. So Bidu, I want to see above the 200-day moving average. Bonus points if the 200-day moving average is starting to slope to the upside. Realistically, when you get these moving averages sloping in a certain direction, we know obviously the 200-day moving average holds significance for financial institutions, larger money managers, retail traders. Everybody's using this thing. 200 days worth of data has to come in and really start influencing the slope of these things. So if you start to see these curl to the upside, and next thing you know, they're just straight up going up, it's reasonable to expect that there's been enough time on the backside to verify the trend change. So 200-day moving average, price needs to be up and over it. If the 200-day moving average starts to slope to the upside, I absolutely love it. I love buying off these lows as long as there's a reason to buy off the lows, not just it's cheap. I don't care. Cheap stuff gets cheaper. But if there's a good technical reason and the narrative is there, like Chinese stocks are breaking out, we've pivoted off the lows and Bidu multiple times before. We're starting to break above the 200-day moving average. The RSI is starting to potentially give us clues that bulls are stepping in. I like Bidu. This is something that I will be looking to buy potentially. I'm going to use probably the $100 area as a trigger. I don't think I'm going to miss the 90 or 88, whatever it's at right now, $88 to $100. I'll let people try to fight over that. Up and over $100, up and over the 200 moving average, RSI above the 50. I'm a buyer of Bidu. I like this name. JD. This was a big winner for us back in September. We were able to capture this early and take this thing up. We were able to turn it free and kind of let it do its thing. JD, one thing that I'm adamant about right now is that I want to find stocks in the Chinese space that did not give back their September rally. I think that's such a key component. If you think about these big momentum thrusts, stocks have characteristics of leadership, right? Leadership roles. And one of these leadership roles that I'm looking for are stocks that did not give a lot of these highs back. And they're out there. We're going to look at some today. That's not to say all of these are bad, but if there's a certain stock that broke out in September and then consolidated sideways or potentially even went up and never came down and broke below, you have to assume that relative strength matters. There's a reason why the market didn't want to sell off some of these that did that more so than JD, right? And so from a technical standpoint, we want to own that strength, particularly when the sector starts to break out. So JD, big winner for us. I've traded this a couple of times over the last couple of years, one of the few Chinese names that I've traded successfully in the last couple of years. I like this thing back up and over 42. I think 42 is a nice pivot here. We've come up, tested it multiple times in the past, right? Resistance area as we broke down into this stage one. We came up and over in September, little oopsie. We're building a base right underneath it. I still think that 42 area holds a significant opportunity to get long in JD. We're very much above an upward sloping 200-day moving average. We're also within a bullish momentum regime. So I like JD. It did get back at September highs. So do I like it as much as some of the other things we're going to go through? Probably not. But I do really like this name. It tends to move a lot. This is kind of a blend between Amazon and Walmart and eBay. It's not as big of a company as Baba. It's not as important of a company as Baba, but it's up and over its 2023 highs, essentially, where Baba is nowhere close. So if you're thinking about, I want to own some Chinese retail names, well, JD is outperforming Baba. So think about that next time you're looking at which positions to own. Above 42, I like JD. Price targets of 55 and 76, which I think will both get hit when Chinese stocks go. Let's talk about the dark horse in the room, PDD. We were able to snag a couple positions in PDD as it ran up, but man, it rug pulled everybody, right? Rug pulled everybody right as we thought it was going to re-break out above 155, 156, and it just never really got there. And I think that's important. I think that's important right now because Baba is trading below its 200-day moving average. So if we look back at some of these other stocks, Baba, which has not been strong, is trading above its 200-day moving average. Bidu is potentially trading above its 200-day moving average, very close. JD, trading above its 200-day moving average. PDD is not. And once again, this is a very simple rule. Buying things below the 200-day moving average is generally is just not a desirable thing to do from a swing trading or position trading standpoint. Wait for it to cross above the 200-day moving average. Now, obviously, if you've been here for this entire session, I've talked about slopes of 200-day moving averages. The slopes matter a lot. You can tell that the slope of this 200-day moving average is starting to even out, and potentially, if price continues to come up on PDD, maybe even start sloping upwards before PDD gets there. That would be fantastic. PDD breaks above the 200-day moving average, and it's already sloped to the upside. RSI above 50. I would love to own PDD again. With an interim price target of 155, and then the next PT up, I'm going for the big home run. I'm going for the all-time high, if that's the case. But until we get up there, this is a wait type of stock. This is a chill type of stock. We have other names that are set up better. I like PDD, but it needs to prove to us that it wants to go higher. So once again, above the 200-day moving average, slope to the upside, PTs of 155, 156, which is relatively close. But if you're trading options, you should have an opportunity to close half at 100% to turn it free. Go for the home run at 240. See what happens. Here's an OTC name. If you're just thinking about Chinese stocks in particular, this particular name is, I don't know what the equivalent, maybe Apple. So I live in Brazil, and Xiaomi phones, if I'm pronouncing that right, are everywhere. I mean, this is the phone to own in Brazil right now. Everybody owns this unless they can afford an iPhone, which are absolutely insanely expensive down here. An iPhone 16 Pro, I believe, is going for like $3 or $4 grand, and convert that over to reais and think about how much they make per month. It's almost unattainable for most Brazilians. So they go and they buy the Xiaomi phone, and as you can see, we're breaking out into all-time highs. I don't know if you want to own this. You want to go venture into OTC or whatever, but I'm thinking about the ramifications of what does this mean for the broader market. We have an important stock in Xiaomi breaking out into all-time highs. It's a $127.5 billion company. So it's not peanuts. This is not a small company, just not easily tradable for us. But think about, we're building this thesis out. Are Chinese stocks going to go? Well, if arguably the most important telecom name is going into all-time highs, that's something that will probably bleed into the rest of the Chinese narrative. So I'm looking at something like this. I might not be a buyer just because it's harder to buy. There's no options availability. But this is something that really gets me excited for owning other types of Chinese stocks. Are they going to stick the breakout? I think when you're seeing stuff like this, it will. Here's another one. Once again, I live in Brazil, and BYD, Build Your Dreams, is essentially the Tesla. Am I allowed to say that? Or it's the EV company of China, essentially. I know everybody loves XPEV. We'll talk through that. But this is a $119 billion company. So once again, not peanuts here. OTC, so maybe we're not trading it with options or whatever. But once again, we're pressing to the upper part of the range and potentially breaking out to all-time highs. So we have Xiaomi, which is like the Apple. We have Build Your Dreams, which is your EV component. And these cars are everywhere in Brazil, a little anecdotal evidence there. This is just a nice range that we've been in for the last couple of years, and we're breaking potentially to the upside here. It doesn't have to be anything harder than this. We get up and over this and into all-time highs, and I think that's a pretty clear indication of where the Chinese types of stocks are moving. We have two very important stocks that are breaking out to all-time highs after consolidating for multiple years. It's only a matter of time in my mind before it bleeds into some of the ADRs and names that are listed over on the NYSE, right? So we have BYD. We have one more, which is probably, other than BABA, the most important stock. By market cap, this is the most important stock, a $500 billion market cap here. These guys are in everything. The largest software company, I believe, in China. I might be wrong. Please don't kill me for that. But these guys they're in everything in China. They're in entertainment. They're in gaming. They're just in everything here. And what does this look like if you're inside of TTI? I mean, this is just a patented stage one that's been in since 2002. We obviously get the nice little potential breakout in September, and then we get the potential stage two uptrend. We have a series of higher highs and higher lows. What do you think is going to happen? I think it goes higher. RSI has been relatively bullish going back to the beginning of 2024. We had that little dip in January, which does invalidate the bullish momentum. But in reality, you can tell that buyers are in control here. You also have a area of the market above kind of the 60 area here where we came up and tested in September. There's really no volume up and over here. So this is something I would look at as a potential big blue sky breakout, trigger being somewhere above $55, but above 60 is really where the party gets started here in this Tencent. So once again, we're not necessarily going out and trading Xiaomi, BYD, and Tencent, but these three areas of the Chinese market, OTC or not, are all breaking out into new highs. Two of them all-time highs. Tencent opportunity to break out into 52-week highs. This is not bearish for the Chinese market. At least that's not how I'm reading it. Let's get into some stuff that we can actually trade. TCOM. Trade that we put on. I still like it. Remember, I said I really want to notice and own those stocks that did not break below those September highs. So you come back and you look at those September highs, and TCOM is trading above it, right? We've held this range breakout. Unlike JD, which fell back, and some of the other stocks that gave back a lot of it, Trip.com did not. TCOM did not. We're holding above an all-time high pivot at 60. We're building a base if you're inside of TTI. You know what that means. We're building a base on top of a previous all-time high area of consolidation and resistance. And now what do we expect? We expect this thing to launch when Chinese stocks start to launch as well. This is a name that I want to own more of. Taking advantage of any pullback as long as we're north of 60. And that's the key here. We flip back into 60 for whatever reason. I don't want to own it. As long as we're holding those previous highs, I want to own it. Upward sloping 200-day moving average. We're trading above it by a lot. We have a bullish momentum regime that started over the last couple of months, but realistically, it's been there for a while. I like this thing up to 88. And then once again, if you're going for the secular breakout idea, which you got it, why would you not? If you're buying this stuff, look out there. Don't take this stuff for a week or two. Play your cards. Figure out what this thing's going to do. Let it prove to you that it wants to run for months, quarters, who knows, years, right? I have no idea what's going to happen, but why would you limit yourself? Go for the 135. Who knows, right? But in the interim term, I like this up to $88. We get up there, build a base. Maybe we can add into it again above 135. I'm buying more of TCOM on any weakness above 60 with these price targets in mind. I like the TCOM trade. NTES is just another one. It's a big company, NetEase, $63 billion. It's a software company out of China. I think that there's going to be an opportunity here. I wanted to show this, though, because it's a large cap software related name, and it hasn't done anything for the last almost 5 years. It just hasn't gone anywhere. Eventually, it's going to break. Line in the sand for me is somewhere above 116, 117. I would ignore this as there is no volume up here to justify that there would be any real resistance. I like this above 117, 116. The beautiful thing about swing trading and position trading is it's more of an art than a science. If I say 116.5 and you buy it at 117, the 50-cent difference isn't going to mean shit when we're looking to capture, 10 10, 20, 30, 40, 50, 60, 70, 80, 90, $100 on the move. It won't matter whatsoever. So if I say 117, you get it at 117.5, who cares? Above 116.5, 117, I like this up to 155. We got to get up there first, though. I like this. This is a range that's been set for the last 4 or 5 years. Like I said, the bigger the base, the bigger the breakout. RSI is above 50, showing bulls are in control. 200-day moving average is starting to slope to the upside, and price right now is trading north of it. Sit and wait, just like JD and just like BABA, though I like this more than BABA. This is consolidating at the top of a uptrend, whereas BABA is consolidating at the bottom of a downtrend. Got to take that into consideration. We're going to go through a couple smaller players here, and then I'm just going to show you a quick scan you can run for yourself if you want to look for some of this stuff, and we'll call it a session. One of my favorite trades that I still currently have on, back from the September rally, is Full Truck Alliance, YMM. This is just a patented stage 1 into a stage 2. I want you to look at the quality of this chart. We have a multi-year base that broke out above 9.5 back in September, rallied again above November. Look at the quality of this chart as opposed to something like a PDD. We have so much overhead supply to fight through. There are so many people trapped in longs right here that we're eventually going to have to work through. You have to assume as a technical trader that that's going to be resistance coming in. From YMM's perspective, there's none. We call this in TTI path of least resistance, and those are the types of trades we want to take. Over time, you take enough of these things where there's no overhead supply that you can reasonably justify as resistance, you're going to have a lot more money in the bank. YMM, I like this up to 12, 5, 13 bucks as its first PT. I'm not looking to add in here yet. I already have a core position, but above 12.5, 12.5 or 13 bucks, I want to own more of this up to 18. Adding into this is totally fine. Best part about YMM, good options chain. Bullish momentum regime never failed going back to September. Arguably one of my favorite charts in the Chinese space. And by the way, it says software. It's software, but more of like a logistics company. This is only a $12 billion company, so it's a mid cap. It has options liquidity. You're not fighting every asshole over screaming about why BABA is undervalued. Nobody even knows this company exists, except for the people that bought it at 9.5, and you've made a couple bucks off of it, right? So good stock here. I like it a lot. King's Cloud, I believe this is something that we've looked at personally inside of TTI. I think we have 1 or 2 guys in this from a shares perspective. This is just yet another stage 1 into a stage 2. This particular setup, if this is your first time watching any of our content where you have these big, long horizontal bases and you get a breakout, these things have been working for the last 2, almost 3 years. I encourage you to go and find these, not only in Chinese stocks, but across the market. King Soft, King Cloud is another one of these that broke out above 10, pulled back into the $10 range into this is a BRB setup that we utilize inside of TTR all the time. And then over the last week or two, it's rallied up into a 17.5. There's nothing to do here in this thing. It's a $4 billion mid cap, but this is just to go to show you that you don't have to own BABA. You don't have to own some of these things that have to fight through so much overhead supply. You don't have to read stupid Twitter updates about why you're an idiot for not wanting to own more BABA and blah, blah. These guys are losers. They've lost for 3 years straight. King's Soft Cloud does not give a shit about what BABA is doing whatsoever. This should be viewed as a potential leader when Chinese stocks break out. I want to own more of this on any weakness back to 15. I do not want to own it if it breaks below 15. Pull back to 15, I want to own more. A break below, I'm out. But as of right now, good trade. Congrats to those of you in TTI that own it. I think I see one of you at least in chat right now. Another trade that we put on recently, XPEV, which worked almost immediately for us. I think it's important to note that BYD is definitely the name to own within the space. It's OTC though. XPEV is a fraction of the valuation, but still giving us a pretty clean setup. This is a stage 1 and 2 is stage 2. Once again, if you're in TTI, you know this, but over here is your VRVP, and what we're looking at is volume based off of price. And obviously, if we turn on the volume histogram, this is volume based off of time. We believe volume based off of price is arguably more important because we can see where accumulation is coming in from financial institutions and larger market participants. I don't know about you, but I don't know how many retail traders are going to be able to put their stamp on a $15 billion company. There's not many of us out there. I can't do it. Those are financial institutions. We can also use the VRVP to indicate whether or not we should be worried about overhead resistance. Classical technical analysis, if you were to turn off your VRVP, we'll look at this previous price action and go, well, we would expect a lot of overhead supply here. We would expect each level to introduce new potential sellers, and we would probably have to fight through that. Well, if we turn on the VRVP, we get a better understanding of whether or not we can expect sellers to show up. And as you can see, there's not a lot of buying power back here when we broke out back in 2023. So if there were no buyers there then, there's probably not going to be a lot of sellers now as we work through this. So we treated this as a stage 1 breakout as is. Above $12, we wanted to own it, and then we added in above 1570, 1575 a couple of days ago. We have a price target of 2175 and 2775. You can own XPEV with us. Any pullback back towards 1575, you can own it. We have a mix of shares and options. This is one of those options trades that you can take. It's slightly higher IV, but the liquidity is amazing, and we went out really far. Right? We're going out 100 plus days, sometimes in certain circumstances 200 plus days. We want this thing for the bigger move. So the implied volatility was a little less than if you're looking to buy weeklies. Once again, look at the bullish momentum here. I mean, this stock has not looked back whatsoever since September. And as a matter of fact, this hasn't been oversold since 2024 Q1. XPEV has had a pretty good run, and we expect it to continue to run well. So once again, take this trade with us. Any pullback to 1575, feel free to enter with us. You can look at the options chain. You guys are smart. You know how to find probably where we're at. Find the volume, find the footprint. We like it up to 2175 and 2575, or 2775, excuse me. We got 3 more. VIPS, shout out Billy from TTI. He loves this stock. I don't know why, but let's talk through it really quick. It's a consolidation zone going back to 2023. We like this as it's trading above an upward sloping 200-day moving average. You can see we're starting to potentially slope to the upside, the beginnings of a bullish momentum regime. We hit overbought. Now we're looking for a potential consolidation. And then multiple overbought. We just don't want to see any oversold readings. There's an opportunity for VIPS to break out as well. Plenty of options opportunity. I don't think I want to own this until we get outside of this accumulation range. Once again, look at how much has been accumulated here. There's a lot. A lot of shares have traded hands. I can see 2 levels right off the bat that I'm interested in. You can see that the market, for whatever reason, respected this level at around $13. You can see volume accumulated, and then also up and over it as well, building another range. Does it have to be any more difficult than throwing some sort of breakout area where the volume starts to drop off? Why not $18? Does it match up with any sort of horizontal level? Sure, we've tapped it multiple times. You could risk off of this $18 area, throw a fib to the bottom of the range. $18 would be your risk on. 11.5 potentially would be the bottom of the range. Let's bring down this proprietary gray box right there. Want to own this above $18 with price target of 22 and 28.5. Why does that make sense? Because there's not a lot of volume up here to potentially become resistance. So we're looking at this as a big blue sky breakout in VIPs. Once again, easy trade because the options chain makes it easy. We are not long this thing yet. I'm waiting for the 18 area breakout. 2 more. QFIN. We had a position in QFIN just like YMM and XPEV. This thing never gave back its September breakout. This has been a monster. Financial related name, QFIN. Also some software exposure as well. I really like this off the 26.5. This is a patented stage 1 into a stage 2. Find the 2-3 year base, buy the breakout, throw a stop somewhere underneath the breakout. If it doesn't work, tough shit. If it does, you're off to the races. This one, off to the races. I like this thing above 37. By any weakness down to 37, as long as it holds, throw your stop below the low here. Like it up to 54. I believe this would be all-time highs, if I'm not mistaken. It would be. So any pullback back towards 37 is a buyable dip as long as you're above it. Stop below this pivot low, January 13th, somewhere below 35.5. That sets you up. Let's do some math. Which one am I doing here? Let's do some math. Let's pretend we get a beautiful pullback. We have that price target up there. We get out where this is invalidated. That's a over 10-to-1 risk to reward. Why does that make sense? We're getting out where the trade idea is invalidated. If we stop hitting higher lows, the trend might be over. If we buy the pullback back towards this level, that makes sense. We found support and resistance there in the past. It juices up this risk to reward of over 10. Completely up to you whether or not you want to take something like that. I know that the more times I take 10 or higher to 1 risk to rewards, the ones that hit are absolutely insane. So QFIN, like I said, already have a position above 26.5, looking to add in on any pullback. Last one we want to go through, XYF, another financial related name. Now, the reason why I wanted to bring this up really quick is this is a small cap per se, but this thing has no volume whatsoever. And so don't fall into the trap. And this is super easy to do on Twitter or YouTube. It's easy to pull up a chart and say, look how great this chart looks. But when you look at the stats, I mean, the volume here sucks. Market cap is super low. The ADR is rather high. These things can be great trading vehicles for niche type of traders that are used to trading low volume types of trades. But for the rest of us, these can get us in hot water really, really quickly, right? So the reason why I throw this out here, it's on the 50-day high scan or pretty close to a 50-day high. It's a playable name if you really want to, but don't fall for the trick of I own XYF because the volume probably doesn't support the fact that they own it, right? So everything does not always happen the way that it looks like it should. So staying away from XYF. So if you have any questions on YouTube, feel free to post those right now. I'm going to go through a really quick scan for you guys so you can see kind of how we look at some of this stuff when we're going through. I really want to focus, or I only want to focus right now on China and Hong Kong. So you're going to see me set this scanner up. This is an opportunity for you to mimic what I'm doing, and then you'll be able to go through this stuff and find the trades that might make more sense to you than the ones that I've shown. So what I'm doing here is China and Hong Kong only, taking out any potential ETFs that are on there. So there's 325 playable names, right? 325 playable names. We want to potentially, let's not get anything under the 2 billion mark. So let's go, we want mid caps are over at 2 billion, and that brings us down a lot. Look at that. We went from 300 plus names to 35. Why do we want to take it down to 2 billion? Listen, if you want to trade sub 2 billion, that's totally fine, but you're going to run into liquidity issues. You're going to run into algorithm issues. The guys that are competing intraday, if you're a swing trader or position trader, that stuff can drive you nuts. This is generally going to be an easier way to trade. And if you're an options trader, you need to make sure that it has a goddamn options chain. So we just went from 35 to 33, right? So here's a decent list of names that you can go through. And listen, 33 names is fast, or a small enough list where you can go through this stuff in 10 minutes and see if there's anything that you want. Generally, what I do is I filter it by sector. I know exactly which areas of the market are pushing up the most. It looks like consumer cyclical has the lead here, and we can append some sort of performance as well. You could do a 50-day high. 4 new names hit 50-day highs. We went through 3 of these, right? XPEV, VIPS, and KC. There's VNet. You can do 0 to 5% below the highs, which gives you names that are about to break out into 50-day highs. There's 9 of them. NTES, BABA, PDD, YUMC, XPEV, TAL, a bunch of these, and they look good. You can take this off if you want, and you can go short-term, 20-day highs. This should give you a different list. Once again, Billy, there's a name that we've traded before and we'll probably trade again. LI, there's an EV-related name that we've traded before. We'll probably trade again. YUMC, Yum, I think, just broke out on the U.S. market. YUMC is probably pretty close to doing it as well into all-time highs. Once again, VNet. And if you want, you can throw an average volume requirement as well to get rid of some of the stuff that might be harder to trade. So in this case, we'll just let everything go. We want average volume. We'll go over 1 million, which is generally the safer side of things. It whittled the list down from 33 to 29. So now you have 29 names with over 2 billion in market cap, with over 1 million in volume that are optionable and shortable. Go through this list. I've shown you a bunch of them on my end. Go through them and find the names that you like right now, right? Okay, the website for ClickFunnels is probably down. It should not even be linked anymore. So if it's linked on the YouTube description, I apologize. I can drop the link right now. Give me 1 second. I'll type it out for you. If anybody's watching this and they want to read more about what we do, you can go to this link. It has a sign up there, sign up button if you want. Give me 1 second to type it out. And thank you for letting me know that that link is broken. I will replace that. It's http://app.thetradinginitiative.com. We have a good description there. You'll notice exactly what you get with the subscription and how we operate. Okay, so that's all I got for you. I'm excited about these Chinese stocks. I don't see a lot of people rallying around this. People, unfortunately, they want BABA and that's it. And I just think there's way better opportunities than BABA. I'll tell you, when it's time to own BABA, it's going to be fun. You're going to feel like we're all on the same team again. But there's so many better charts right now. And at the end of the day, remember, we're here to make money. That's it. You're in this market to make money. And if you're here to grandstand about a company or you want to be right more than make money, you're going to find a way to do that, but you might not make any money in the process. So if you're in the market right now to make cash, find the charts that are giving you the best opportunity to make that cash and follow them. Remember, this is a bull market, at least in the United States. Is China about to break out? I think there's a good chance. My name is Hamilton. I'm here at the Trading Initiative. If you like this type of content, please like and subscribe. I dropped the link in chat if you would like to join us. Quarterly subscription, read about how we operate. Let me know. I'll catch you in the next video, guys. Tomorrow, we have the crypto report, also on YouTube. Join us for that 11.